Hello and welcome back to today's episode of Crypto. Oh my god, there's a lot of good news going on, so let's just dive right in. Okay, so first and foremost, we talked about Arizona, we caught up with New Hampshire. These strategic Bitcoin reserves, these SBRs, they are just rolling in. And coming out today, we find that Arizona, after passing a bill through the House and the Senate, rejecting said bill, does enact a new law to secure unclaimed digital assets and establish a Bitcoin reserve fund. So previously, the bill that was rejected allowed a new fund to be created out of taxpayer dollars with 10% going to Bitcoin. This version, much safer and much more amenable, in my opinion, actually allows them to build a strategic reserve from captured Bitcoin, from unclaimed, again, from criminal acquisitions, from things of that nature. So if they come upon Bitcoin because people were doing money laundering or dealing in drugs in it, or any other such way, mining might be an example, well then this is fair game for them to build a reserve. So I think that's a bit de-risked in terms of the political message that it sends, while also maintaining a reserve itself. Now after that, we see that Oregon signs SB 167 into law, clarifying digital asset rules and legally recognizing crypto as collateral. This is very big. This means that people that make wealth in Bitcoin or in cryptocurrencies might be able to use that as collateral for, say, a mortgage or to take out a loan to pay for a house, if you will. Historically speaking, it's been very difficult to translate any sort of crypto value into real world value without doing a taxable event of a pure sale. So this is all moving in a very positive direction for people that do like to build wealth in crypto or store their wealth in crypto. This opens further opportunities for lending, borrowing, wealth expansion. And at the end of the day, that is a signal that they believe these collateralized assets, these cryptos, probably mostly Bitcoin, to be of some legitimacy. This is a massive legitimacy test. Now, as we keep going, it's looking like the Texas Strategic Reserve Bill, SB 21, has passed committee, will proceed to vote. So these things are just picking up steam. And this is, of course, coming from Thomas Ferer, who's pointing at Bitcoin laws. So I'm just going to hop on over there. And Bitcoin laws is a great website because, I mean, just look at the graphical representation. And look, when you take on Bitcoin, you even gain a little bit of extra. No, I'm just kidding. But this thing, I mean, wild, right? Let's look at New York Reserve bills. Wow, there's 3 on the docket, and we can dive into each of these. This is actually quite in-depth and pretty amazing. My home state of Pennsylvania, very sad to see that HB 2664 is dead and HB 1210 hitting the committee. I have very little faith in you there. Texas, of course, has a bevy of deals, as do a variety of other states. So we can see that the majority of states are actually looking towards some sort of adoption. This is pretty amazing. And who knows how this attrition will impact a national reserve, or if the National Reserve, conversely, will get these states on board. But when we look at it, total measures, 143 measures in 40 states, with 48 strategic Bitcoin reserves introduced in 26 states. 37 live in 18 states. And of course, if you want to hop into the race, right, if you're a betting man, we can see Arizona, New Hampshire, they've got these 2 things enacted, with more coming from Arizona, Texas, North Carolina, and then everybody else being pretty much at the starting line. But what a fun site. Go check it out, dive in more. It'll take you through a greater depth. Now, in further news, Hester Peirce, crypto mom and the leader of the SEC Crypto Task Force, has been moving forward on a lot of very positive long tail news. She's now provided the written version of a speech which says, I'm thinking about a potential exemption from registration that would allow firms to use digital ledger technology to issue, trade, and settle securities. A sketch of the idea is here. And of course, we have the complete version of this statement, a creative and cooperative balancing act. Now, there's already a lot of movement in the RWA space, real world assets. This is mostly around T-bills. It's a fairly straight play. They generate yield. You can purchase them with dollars. So you raise some funds, you buy those T-bills, you get cranking. But we are seeing the more expansive RWA play. I think it's a very poor term, real world assets. Are we talking about real estate? Are we talking about collateralized loan obligations? Are we talking about equity, right? It's poorly defined, but it is coming into light. And just to sort of riff off of Chairman Peirce's statement, we can look at Superstate. This is by Robert Leshner, who created Compound, really one of the first products in the Ethereum DeFi ecosystem, talking about his product, his new business, Superstate, which is looking at equities on chain, basically looking at securities, stocks, things of that ilk. Now, while it says it's being traded here on Solana, it's actually going to be open to both Ethereum and Solana. And in good founder mode, it's like, why limit yourself, right? Robert's got this idea of bringing on early equities, and maybe this becomes a pre-trade market before an uplisting to the New York Stock Exchange, NASDAQ at all. And this is going to be a very fun project to follow. Robert has already had great success in the cryptocurrency space. He's as native as it comes, and he has a very deep understanding of what the technology is capable of and how to move it forward. Of course, we've seen my old alma mater, Republic, pushing forth Hamilton Lane Private Infrastructure Fund. So taking fund products and offering them, these will all be tokenized and sit inside your Web3 wallet. And of course, tokenizing film. We have Robert Rodriguez, Brass Knuckle Films, Eli Roth, the horror section. And look, they've got 2.8 million raised from almost 2,000 investors. This one has 2 million raised, which is maxed out from 2,300. So we can see that we're looking at different opportunities. Both of these are film financing, where the holders of the asset are open to the waterfall of revenue. So if any of the movies that these gentlemen make explode, then the token holders get some upside to that. Of course, we might see things like credit rights in the form of NFTs. So if you have an NFT from being an early investor, you could get a credit inside the movie, and that might be something that's tradable. So all of this is moving towards a new paradigm of how we view value and the internet. We can see the digitization of value begin to occur. And one thing that recently came out, kind of maintaining the heavy oversight hand against all of the egregious actions undertaken by the Biden admin and Gary Gensler. We have a fun release from Paul Grewal, the general counsel of Coinbase, and he is coming out. They did a FOIA request, which is a federal information gathering resource, and they got a lot of the FinCEN documents around conversations of crypto and regulatory capacity. What they've been finding is just a whole bunch of BS, as you could imagine. So they've come out just sharing out of the 10,000 documents, talking about 3 points that they think hit pretty nicely, which is 2019, an email acknowledging the crypto regulatory gap years before the SEC argued that there was no such gap. This is really the consistent stance that happened over the last 4 years. A 2023 email from the New York Attorney General's office asking the SEC to submit an amicus brief, which is throwing in your name and supporting a case either for or against it. In this one, arguing that ETH is a security. And rather than to clear that up, the SEC chose to say nothing, which is just frustrating, right? Because they kept saying things are a security, and maybe they are, maybe they aren't. And of course, in this New York Attorney General take, this would have put some defining characteristics around it. So they actually stayed out of this KuCoin case entirely so that they could maintain this opaque stance. And in 2023, an SEC email discussing Coinbase's video submission in response to a Wells notice stating that they didn't have the IT capabilities to open it. I mean, how pathetic is this? A top governing body who are supposed to be these highly educated lawyers and saying that they don't have the IT capabilities to open a video submission in a legal case. So that's really sad and rather pathetic. And it's fun to see that Coinbase has not forgotten the last couple years of pain that was brought upon this industry. Of course, this impacted Coinbase, a publicly traded company, quite significantly by keeping their growth capabilities and their product release capabilities quite at bay. Now, one last thing, we are beginning to see this breakthrough of bigger applications taking on blockchain technology. Obviously, Robinhood is going to roll out pretty significant things, replacing their entire fintech backend with likely an L2. I covered that, but we now see Stripe introducing stablecoin financial accounts. Hold a stablecoin balance, send and receive funds with fiat and crypto rails accessible from 101 companies. What you are looking at here is a point of sale mechanism that basically blurs all of the lines between fiat currencies and on-chain digital rail currencies. This is just the first step. I think once you get used to the digital currencies, the fact that they're open 24/7, that they don't cost anything to send, that there's no geographic boundaries involved, it's just a better format. I know crypto has its UX issues, but when you become accustomed to its level of accessibility and you go to a bank, I mean, it becomes this major head shake where you're just like, you know what? You just don't work as well. This technology is so far advanced. And when you become accustomed to living on chain, I mean, it's like going back to a more primitive age to do standard banking. It just is like, why does a wire cost $25? Are you kidding me? So all of this is to say we are moving forward in some very serious, substantial ways, whether it be Bitcoin reserves, which are clearly sweeping the entire country, or major players like Stripe, Robinhood, obviously equities beginning to come on chain. Do we even see new marketplaces take fold that are maybe pre-New York Stock Exchange, pre-NASDAQ, and sort of a pre-public, right? That is what Republic's goal has always been, which is to open the private equities market, and we'll see what Superstate does. There's a lot of players putting their name in the hat of RWAs, of tokenization of standard assets, and moving the old traditional financial rails onto blockchain. Obviously, blockchain's great. It is anti-fragile. It takes a licking and keeps on ticking. So very happy to see a $100,000 Bitcoin this morning. Hopefully that bodes well for everyone. As always, stay safe, and I will see you tomorrow.